Hi everyone, welcome to another video. Why do I always talk about long-term investing? I think that requires an explanation because many people are carried away by short-term instincts and negligible amount of people are actually investing for the long term. The data shows that even in the mutual fund where you need to put for long term to get a decent return, the average span of a mutual fund is less than 2 years, is what data shows. So that is not a good sign, right? We all talk about the benefit of long term investing, but when it comes to actual investing, not many are doing that. Since I am a proponent of long term investing, I want to talk why long term investing is the best. And after watching this video fully, you will clearly understand okay, now it makes sense, right? So let's start the video. First and foremost thing is that we, most of us are working professionals, right? Uh, our majority of our time we spend on our job. I would say 80% of the time. And what is the time left for you to study and invest? It is very minimal, right? Now, let's talk about short term investing or swing trading or anything of that sort. So, for that, first of all, you need to be very active in markets. You need to track all the newses, you need to track the quarterly reports of the companies, and you need to know what's happening in and out if you are investing. First of all, even for long term investing, you need to know all these aspects. But I'm talking about cutting or taking profits and investing, like frequent buying and selling, right? So, suppose you invested into a stock, you invested just for the sake of investing without learning or doing too much of research. Sometimes the stock will go up and you don't know when to exit. It's going to be a problem, right? Then suppose you took profit out of it. Are you able to find another stock to deploy your cash? So again, you have to analyze the companies, right? Again, you have to find a stock. Maybe it will go again, go up again. You will take profit. Do you have that kind of time when you have a full-time job? So that is a primary issue, right? In a year, if you want to analyze multiple companies and find good quality stocks, first of all, I'm reminding you there are not many stocks that are investable, right? And there are not many in the any stock market if you take, but Indian stock market as well, with correct valuation, with good business model, with quality management. How many stocks you can find, right? And how many you can invest at the moment. So it's a big task. You don't have enough time to do that. There are people who can do it full time. They are doing it. I know that there are people who are doing it and they are putting content around it in YouTube. But can you do that? It's difficult, is what I feel. So that's the reason it's always better to find quality companies which had good track record, and you believe that this can, with good dividend yield as well, so that you will have good cash flow. So investing into such companies will, first of all, those companies will not fall or rise immediately. They are more or less same, and you can invest for a very long time. Though the returns will be less, but you will have dividend income and minimal growth as well. But my point is that you don't have to worry too much about daily price movement, and you don't have to worry too much about when should I exit and where should I invest next, right? So that is one aspect. having a career, focus on your career and invest for long term. Now, what second point is, if you don't have time to invest even for this, right? I mean, finding these quality companies are investing for long term, the best thing to do is invest in index funds, right? Or any flexi cap funds that give good returns in the past 20 or 25 years. Invest into any one or two mutual funds and sit tightly without touching that. That is the best aspect, so that you can focus full time on your job, get salary, and invest. So these are the two ways with which majority of us can invest, because we don't have enough time to do research and find new companies every now and then and rotate our cash, right? And another aspect is the tax implication, right? If you are regularly taking profit and investing, obviously you have to pay. If you are taking money within 1 year, you have to pay short-term capital gain, right? So there are other tax, STT and other component of taxes involved. So the more you churn your portfolio, the more tax you have to pay. Instead, if you are investing for long term where you are not going to touch the stock, the alpha from that will be higher compared to frequent churning. So the tax implication is huge. We don't realize it unless we get phenomenal returns. Uh, it's not going to help you, right? So that is the second point. And thirdly, when you are investing for long term, you are not worried about the volatility. Suppose you invested and you suddenly saw a 50% uh, spike in your stock price and you are going to exit. Now you are thinking about where to invest next. So the stress or the mental fatigue that comes with analyzing, it's related to the first point that I discussed, right? So the stress levels are huge. You are constantly checking the market when you do that and exiting, where to invest next. Other One more thing is, the another point related to this is that you may tend to invest into some other stock market, right? I mean, these days many people are investing in US stocks. It's, I don't know how you can do that. See, in Indian market itself, there are large number of companies. Now, if you go to US, obviously there are some well-known companies, Google, Facebook, Amazon, etc. If you're investing only to that, even then, are you sure that these companies are going to perform well? Maybe yes, but again, how soon? Um, See, it's like trading, right? You never know when the stock go up. If you take the historic chart of any company, so Nvidia or Apple or Google, there are instances where if you invest, you will still be in zero returns or minus returns. So your entry point is extremely important. When the stock had fallen, and if you are able to invest at that time, then you are able to get benefit out of that. But otherwise, when you purchase a stock when it had reached its peak, then it's going to be very, very difficult, right? So finding the peak and finding the bottom and investing at the right time. Do you have that skill? With job, can you cultivate that skill? There are a lot of questions involved in this, right? So unless and until you have enough time, short-term investing is not suitable for you. It's always better to invest for long term. And the beauty of compounding, you can actually see when you do that long term investing. It is stress free, tax obligations are less, you will be peaceful, and you can focus more onto your job. You can improve your skills, you can make good money from job or business. I forget to mention about the business part. Job or business, get try to get as much money as possible from job or business and invest into stocks that can give you good returns over the long term, right? So that's how I approach investing, long term value investing. I hope you got some clarity on why I talk about long term investing. So if you are someone already investing for long term, very good, good job. Keep doing. Sit tight. Don't let the short term narratives of the market distract you, disturb you. As long as you had invested into the right stocks, you don't have to worry too much. And as long as you have one or two good mutual funds, you don't have to worry too much. Just keep doing, keep investing. The market will definitely going to give around 12 to 13% return, annualized returns for long term, right? There is no doubt about it. So that's all what I want to talk in today's video. If you are liking my content, do subscribe to this channel. I will come up with another video. If you have any questions or suggestions, please comment below. I'll come up with another video. Till then, take care. Bye.